Okay, let's start. Our topic for today is income taxation. So first is we need to define, guys, what is income for us to better understand how to compute the taxable income of an individual or a corporation. Okay. So what is income? So income means profit or gains. It is the amount of money coming to a person or a corporation within a specified time, whether it is a payment for services, interest, or a profit from investment. So if you have a business, so you will be um, earning income or profit on those. It is also means cash or its equivalent. It can also be thought as the flow of the fruits of one's labor. So if you render services, if you render work, then you will have an inflow in terms of cash or its equivalent. That's an inflow of the fruits of your labor. That's income. Okay. So now let's distinguish income versus capital and property. What's the difference between the two? So capital is a fund. So in accounting, we all know what is capital. It is the investment of the person, of the individual, of the corporation. While income is the flow. If you put a capital, then there should be a flow of that capital, and that is your income. Capital is wealth because it comes from your own money, from the individual's money or from the corporation's money, while income is the service of wealth. Okay, so property is the tree while income is the fruit. So by analogy, your capital represents your startup money, your startup investment. So we can compare that one as your um, tree or kahoy. Your income is the fruits. So pag tanom mo sa kahoy, that's your investment, that's your capital, that's your property. And then if mamunga na siya ang kahoy, okay, for example, a mango tree, so if na siya bunga, fruits, that fruit is considered as your income. That's the fruit of your labor of planting that mango tree. Okay, that's how we compare income and capital by analogy. So capital is a tree, while your income is the fruit. Okay, next. What are the elements in the imposition of income tax? So first, there must be a gain or profit, because if there's a net loss or loss, then the imposition of income tax is not possible. Okay, as we all know, but basta net loss ang company or ang individual, there should be no income tax being imposed. Lugi na gani, imo pa yung taksan. So, if loss gani, there should be no income tax. So, that is why number one there must be gain or profit. Second, the gain or profit is realized or received. So, all you know, there is two kinds of gains, unrealized and realized. So it should be realized, meaning na not necessarily na received, but we talk about realized, it is already earned. Okay? So nahaguan na nimo siya, naserbisyuhan na nimo siya, nahalin na nimo siya, na-realize na siya, meaning earned na gyud siya or received na gyud nimo siya. Okay? Either actually or constructively. So again, income, gains or profit can be received actual if you are being paid in cash, or constructively if the amount is being paid to you by check. That's constructive receipt of the profit or income. Okay. Number three, it is not exempted by law or a treaty from income tax. So that's the three elements. So income must not be exempted by law. Because if the income is exempted by law, then you cannot impose income tax. Okay? There must be a provision in the law that exempting that specific income. If none, then that income is subject to income tax. Income tax is assessed on the income received from any property, activity, or services that produces the income because the tax code stands as an indifferent neutral party on the matter where income comes from. Okay? So please take note of this. Sa tax code na to, sa NRIC, it states there that income from whatever source. Okay? So all income derived by the corporation, all income derived by the individual, whatever source it is, it must be subject to tax. Unless, again, exempted by law, which is element number 3. So please take note lang this one. Either ma-illegal na ang source sa income, magbaligya kag shabu diya. This is, again, stated in the James Doctrine na illegal sources of income is still taxable. And we use that here in the Philippines. Okay? So whatever source the income is, once you earn that income, then that is subject to income tax, unless otherwise exempted by law. Okay. What are the national internal revenue taxes that is being imposed by the Philippine government? First is income tax. So later on, we're going to discuss that one. Second is estate and donors taxes. So these are transfer taxes. Estate is donation mortis causa or donation upon death. Donor taxes is donation, again, inter vivos. Okay, value added tax. We have other percentage taxes. We have excise taxes or taxes on exercise of privileges. We have also documentary stamp tax. And last one is other taxes which are hereafter may be imposed and collected by the BIR. So please take note of this national internal revenue taxes. Okay, let's define income tax. A tax imposed on taxable income in one taxable year. Okay, that's income tax. So every year, every April 15, each individual earning income must file an income tax return. So please take note of April 15. So this year, wala na siya ma-extend. But last year, it was extended until June because of the pandemic. But right now, it was not. So again, a tax imposed on taxable income in a one taxable year. So every year, there should be an annual income tax return filed to the BIR. Again, it is also based on the gross income, taxable income, payable yearly by individual persons or corporation. So why it is stated here, gross income or taxable income? It is very different. Huh? Again, so gross income, it is just sales less cost of sales return allowances and discount and cost of sales. That's your gross income. And taxable income are those gross income minus your operating expenses. That is your taxable income or net income sa accounting. But in tax, that what we call that one as taxable income. So it is stated or because the taxpayer has a choice, either gross income or taxable income. It depends on what tax rate you will gonna use. If taxable income, you will use the tax table or the graduated tax table. Gross income, you're gonna use the 8%, which I'll gonna discuss later on. Okay, please take note of that. What are the types of income tax? We have presumptive income tax, a scale of income tax imposed in relation to a group of persons' actual expenditure that presumed income. So presumptive, gani siya. So imposed based on the presumed income earned by the individual. Composite income tax, a tax consisting of a series of separate quasi-personal taxes assessed on the particular source of income with a superimposed personal tax on the income as a whole. That's composite. Unitary income tax. Incomes are arranged according to sources. Separate items are added together and rate applied on the resulting total of the income. Again, we have two systems of income tax. We have global system and the schedular system. So it's a global system, a system employed where the tax system used indifferently the tax base and generally treats it as a common all categories of taxable income of the individual. It taxes all categories of income except certain passive income and capital gains tax. That's a global system, meaning you just impose one tax rate for the for the entire income. So global system usually used for corporations, guys, because again, corporations are taxed at 30% prior to 2021. I mean, prior to the effectivity of the CREATE law. But under the CREATE law, it is now subject to 20% if less than 3 million and 25% if more than 3 million of earnings for the corporation, which I will gonna discuss later on as well. So schedular system, it is a system employed where the income tax treatment varies. It is made to depend on the kind of category of taxable income of the taxpayer. So schedular, based on your table or the graduated tax table, you can see there na ang imong income tax will depend on asa ma-fall ang imong income sa table. Okay? It itemizes the different income and provide varied percentages of taxes to be supplied thereto. So global system is more on corporation, schedular are more on individual. Okay? So sa Philippines, we use both global system and schedular. Okay? So either of the two, I mean mix ang gigamit sa Pilipinas in terms of systems of income taxation. Okay. So what are the features of the Philippine income tax law? Of course, income tax is a direct tax. Why it is a direct tax? Because again, it is imposed to the person or the individual or the corporation who earns the income. Di man pwedeng nga si company ABC, si company XYZ ang mabayad sa iyang income tax. So it should be company ABC. Di man pwede si Pedro ang mabayad sa tax ni Juan, di ba? Ana na siya. So that is why it is a direct tax. So who earns the income? That person must pay the income tax, I mean. So that is direct tax. Progressive, why? As you all know in the basic principles of taxation, progressive meaning the higher the income you earn, the higher the taxes you will pay. That's progressive. Comprehensive, why? It is comprehensive because again, all kinds of incomes that you've earned are taxable or subject to income tax. So comprehensive meaning it is complete. So dili pwedeng partly lang sa imong income ang taxan, but the entire or the complete set of income earned, unless exempted by law, is taxable. And four, it is semi-schedular or semi-global tax system as mentioned earlier because right now, for example, for individual, you can still choose either 8% or you will choose the graduated tax table. And semi-global as well for, again, for corporation, there's a fixed tax rate that is being imposed on all corporations. 30% prior to prior to July 2020, and then July 2020 onwards until 2023, it is now 20%. Okay. That is why semi-schedular and semi-global. It is a mixture of both tax system. Okay, we need to know the criteria in imposing Philippine income tax. So the first criteria is citizenship. We have also residence and the source. Citizenship, meaning of this is that it depends on what the citizen of the individual taxpayer. So later on, as you all know, katuning within and without, if you are a resident citizen, then you are taxable within and without the Philippines. So all income you earn if you are a resident citizen are taxable. That is why we need to check or we need to know what is the citizenship of that person. Para kay Bauta, what are the income that is taxable here in the Philippines? That is why that is very important criteria, citizenship. Second, residence. So, yes, di ba? We need to know as well asa nagpuyo ang individual. Because if that individual is a resident here in the Philippines, so tanang income niya nga na-earn niya here in the Philippines should be taxable. Okay? If that individual is not a resident in the Philippines, so are all taxable? It depends kung resident alien, resident, di ba? Kung resident alien, of course, taxable in the Philippines. Kung resident citizen, all outside or within the Philippines, taxable. Okay, so you need to know the residence of that individual. Para kibaw ka kung what income is taxable or not. And third one is the source. So you need to check as well, where's the source of the income? Is it source outside the Philippines? It is source within the Philippines because again, if it is not earned out, not earned here in the Philippines, and then you are not a resident citizen, then that income is not taxable here in the Philippines. Okay? Only those income earned in the Philippines are taxable. Okay? Except kung resident citizen ka. Because if resident citizen ka, all income earned outside or within the Philippines are taxable. That is why it is very important that you know the criteria of imposing Philippine income tax. Okay? Citizenship of the individual or the corporation, the residence of the individual or the corporation, and the source of income or source of income of the person or the corporation. Okay, let's go to the taxpayer. So, who are the taxpayers? So, it is any person subject to tax imposed by the tax code. Okay, so income taxpayer are those persons who derive taxable income. Of course, if you don't have any income, you are not a taxpayer. Okay, so if you derive taxable income, if you have income, then you can be considered as a income taxpayer. So what are the kinds of taxpayers? We have individual taxpayers, those person, natural person, guys, corporate taxpayers or corporations, those are juridical person, please take note, estate under juridical settlement. So estate are those properties, okay, na gibilin sa decedent or sa namatay to his heirs are taxable as well. That's another kinds of taxpayer, the estate. And trust is also another kind of taxpayers. We will gonna discuss that one by one as we go on. Okay, let's go first to individual taxpayers. So sa individual taxpayers, first, we need to identify. Is it a citizen or an alien? So citizen, as we all know, please read the 1987 Constitution, citizenship there. So of course, all Filipino citizens and born in the Philippines are citizen, of course, diba? So you have also naturalized citizen. So those are citizens in accordance with the law. Okay? Natural born is diri jud ka na tao. Your father and mother are are Filipino citizens, so you are a natural born citizen. Okay? Naturalized is gonna you do an act in accordance with the law. Then alien are those person nga, as you know, not a citizen of the Philippines, of course. Okay, under the citizen, we need to classify. Is it a resident citizen or RC, or a non-resident citizen, or NRC. So resident citizen are those living in the Philippines, of course. Those Filipino citizens that are living in the Philippines are considered resident citizen. Those non-resident citizen, we're gonna discuss later on kung unsay mga requirements niya. And alien, we can also classify that one further to non-resident alien and resident alien. So resident alien are those alien nga nagpuyo sa Pilipinas na, but they are not citizens yet. Alien sila, foreigner sila, but nalang sila nagpuyo na sa Pilipinas. Maybe they married a Filipino wife, mga na sila diri, they are considered resident alien. Non-resident alien are those alien na wala nagstay here sa Philippines. And we can further classify them into non-resident alien engaged in trade or business, or non-resident alien not engaged in trade or business in the Philippines. Okay, as discussed earlier, citizens under Section 2 of the NRIC are as amended. So citizen is, you can find that one in Article 3, Section 1 of the 1987 Constitution. So katong kung ganyan na, whose father and mother are Filipino, so you are considered as a citizen. Who are now the non-resident citizen? So as citizen of the Philippines, who establishes to the satisfaction of the commissioner the fact of his physical presence abroad with a definite intention to reside there. Okay? So citizen ka sa Pilipinas, pero ni-abroad ka with your definite intention to reside therein. So, matulog ka, migrate siguro ka dito. So, then you are considered as a non-resident citizen. So, please take note of the intention. If the intention is to establish a definite decision to reside abroad, then you are considered as a non-resident citizen. Second, a citizen of the Philippines who lives in the Philippines during the taxable year to reside abroad, either as an immigrant or for an employment on a permanent basis. So you are considered also as a non-resident citizen if you are employed abroad on a permanent basis or as an immigrant. Number 3, a citizen of the Philippines who works and derives income abroad and whose employment thereat requires him to be physically present abroad most of the time during the taxable year. So, you're employed abroad and then kailangan dyan mong presence abroad, then you are considered as a non-resident citizen. Example of this are OFW, seaman, so diba, kontrata naman na sila. Contract for 6 months, 9 months, 9 years, 3 years, 1 year. So for that period na nagstay ka outside the Philippines because kinahanglan imong physical appearance or presence abroad for that particular work, then you are considered as a non-resident citizen. Number 4, a citizen who was previously considered is a non-resident citizen and who arrives in the Philippines at any time during the taxable year to reside permanently in the Philippines shall likewise be treated as a non-resident citizen for the taxable year in which he arrives in the Philippines with respect to his income derived from the sources abroad until the date of his arrival. Take note of until the date of his arrival. So example here is that, for example, abroad ko, mabalik ko sa Pilipinas by June. So ang akong income from January to June is still, June 1, is still considered as a non-resident citizen. I am still considered by that time as a non-resident citizen because until the date of arrival. So, in-arrive din ako here, usap ako ma-considered as a resident citizen. But for the time na ako sa gawas, okay, and then ako'y intention mo balik sa Pilipinas, permanently. The time na nag-stay pa ko dito, while wala pa ko maabot here, I am still considered as a non-resident citizen. Okay? So, kana. So, for example, by May 1, nanak ko sa Pilipinas. So, by January 1 until April 30, I am still considered as a non-resident citizen. Okay? Because take note what is provided in the law. In likewise be treated as a non-resident citizen for the taxable year in which he arrives in the Philippines with respect to his income derived from sources abroad until the date of his arrival in the Philippines. Okay? So the income I earn from January to April 30 is still considered, I am still considered a non-resident citizen that time kung kumabot sa Pilipinas, then that income I earn abroad is not taxable. So for May 1 na, kay May 1 naman ko naabot. So May 1, I am now considered a resident citizen. If still, nag-earn niya po kong income abroad when I arrived in the Philippines, by May 1 onwards, then kanang May 1 onwards, yung mga income na ko abroad, kana ma-include sa akong taxable income. But those January 1 to April 30, income abroad, since I am still considered as a non-resident citizen, those income is not taxable. Understood? Okay. Please take note. To be considered physically present abroad, most of the time of the taxable year, a contract worker must have been outside the Philippines for not less than 183 days during such taxable year. So please take note of this. So not less than 183 days. Okay? Kaya kung, what if, nga rin kung sir, kung less than 183 days na 180 days ra ko sa abroad. So kung 180 days abroad ka, you are not considered as a non-resident citizen. You are a resident citizen. And income earned outside and within the Philippines are taxable. But if I stay in Canada, for example, 183 days or 185 days, then that time I am considered as a non-resident citizen. So kung income na earn sa Canada when I stay there is not taxable. Okay? But if I stay there just for 182 days, kung nalang yung isa, so still I am considered as a resident citizen. Taxable yan kung income na earn dito. So please take note, ha? It should be not less than 183 days. The taxpayer shall submit proof to the commissioner to show his intention of leaving the Philippines to reside permanently abroad or to return to or reside in the Philippines as the case may be for the purpose of this section 22. So, yes. Now, let's go to the alien. As mentioned, those foreign-born person who is not qualified to acquire Philippine citizenship by birth or after birth. So, those foreigners. Section 22, the NIRC defines a resident alien, an individual whose residence is within the Philippines and who is not a citizen thereof, an alien actually present in the Philippines who is not a mere transient or sojourner, is a resident for income tax purposes. So dapat dili ka transient lang. What do you mean by transient? Meaning bang for a limited stay lang. So if you're a resident alien, dapat permanent ay mo stay here sa Pilipinas para you will be considered as a resident alien. Again, important note, whether an alien is transient or not is determined by his intention with regards to the length and nature of his stay. So it depends again, the ultimate in check on is the intention of that alien. Kung permanent ba siya mo stay sa Pilipinas or not. And the nature should stay here. Letter G defines the non-resident alien. As mentioned earlier, those are the individual whose resident is not within the Philippines and who is not a citizen thereof. And we further classify non-resident alien, right, into two: engaged in trade or business within the Philippines and not engaged in trade or business in the Philippines. So, who are those alien engaged? Of course, katong sa problem, guys, it is very explicit stated there that this alien is engaged in trade or business pag siya ang tag-iya sa business, na siya dito na business sa Boracay, sa Cebu, kana. Automatic, he is a non-resident alien engaged in business. But what if the problem does not state na ba siya business? So, you will now go to this next requirement. If the aggregate period of that alien stays here in the Philippines for more than 180 days during the calendar year, then he is assumed to be a non-resident alien engaged in trade or business. Basta ni puyo din siya sa Pilipinas of more than 180 days, which is 6 months, more than 6 months, then he is considered doing business in the Philippines. Okay? If not, gani, if the aggregate period of the stay in the Philippines does not exceed 180 days, wakabot 180 days, 179 lang na, then that alien is not considered doing business in the Philippines. Okay? Please take note. Engage in business either, duhara na. First is, it is clearly stated that that alien is doing or conducting business in the Philippines. That's number one. If the problem does not state that fact, we will go to the next criteria or requirement. How long that alien stays here? If that alien or non-resident alien stays for more than 180 days, 180 days, 180 days, yeah, more than 180 days, then that individual is considered or presumed to be engaged in trade or business. If less than gani or does not exceed 180 days or 180 days ragyod, then that individual is considered non-resident alien not engaged in trade or business. Okay? Klaro? Kanahan, timanina. Okay. Now let's go to corporation. I will have a separate discussion on corporation, but just an overview lang. Same goes to the individual. So sa corporation, we have two gihapon. We have domestic corporation and a foreign corporation. So I know that you know what is a domestic corporation. So a domestic corporation or corporation created and organized in the Philippine law, under the Philippines or created under the Philippine law. Okay, that's domestic. Okay, those registered with the SEC. Foreign corporation, very simple. Corporation which is not domestic and created under foreign law. Okay, so sa foreign corporation, you can further classify that one into two. Same sa alien, we have resident foreign corporation. So the corporation has a business here, but that business is created lang. The corporation is created under a foreign law, but naalan sila diri sa Pilipinas nag-do business. That's resident foreign corporation. And non-resident foreign corporation are those foreign corporations not engaged in trade or business in the Philippines. Okay, so please take note that under the corporation includes the types of, di lang necessary na corporation ra, because again, sa corporation, you know that they are taxed on a fixed rate, 30%, prior to the create law. It includes as well partnership, but take note, ang partnership na ay exemption. Sa partnership, it excludes the general professional partnership. So partnership of lawyers, accountants, so kana. Basta in exercise, partnership really in exercise of profession, those are not taxable under, the same as a corporation. Why? Because a general professional partnership are taxable on an individual sa individual partners because in exercise of profession man siya. So ang shares like income must be i-share good siya sa individual partners. Then the individual partners are now taxed on that share sa general professional partnership. Mo nang wala siya gi-under as a corporation. But all other partnership except for GPP are taxable same as a corporation. Okay? Joint stock companies, joint accounts, associations or insurance companies which are registered with the SEC are taxed as a corporation. So as mentioned in my note 2, GPP, joint ventures, GPP is excluded. Joint ventures or consortium for the purpose of undertaking construction project, engaging in petroleum and geothermal and other energy pursuant to an operating or consortium agreement under a service contract with the government are also not taxed as a corporation. Okay? Take note of that. Now, let's go to the general principles of the individual. It is very important na inyo ni masabot. Not necessarily memorize it, but understand it. So, earlier, we classify taxpayers, right? Individual taxpayers to resident citizen, non-resident citizen, alien, non-resident alien, and non-resident alien engaged in business and not engaged in business. So, now, here, we need to know what are the sources of income that is taxed here in the Philippines. As mentioned, if you are a resident citizen, your income or all income derived by a resident citizen are taxable. Okay, that is why you can see here, it is within and without. Okay, source of income within or without the Philippines. If you are a resident citizen, then that is taxable. What is your tax base? It depends. It can be the taxable income if you choose graduated tax rate. It can be gross income if you avail the 8%. Okay? Now, non-resident citizen. So, non-resident citizen, wala ka nagpuyo sa Pilipinas. So, since wala ka nagpuyo sa Pilipinas, based on the symbiotic theory, wala ka receive of, right? Wala ka receive of benefit from the from the benefit or protection from the government. So the income you earn outside the Philippines is not taxable. Only those income earned in the Philippines. Of course, mas a source within the Philippines, ganit, privilege man mo nga naka-earn yung income sa Pilipinas, then you need to pay taxes with it. Since you are non-resident citizen, wala makaka-receive sa protection or sa benefit based on the symbiotic relationship theory, then you are only taxable to those income earned within the Philippines. Okay? So within only. What is your tax base? Still, taxable income, gross income. It depends if you choose graduated or 8%. Resident alien. So resident alien, you are residing in the Philippines. Okay? So you are only taxed for those income you earn within the Philippines only. Okay? Di maka-citizen. Alien raman ka. But nag-stay lang ka. Since naka-receive mo kag income here, you are privileged to earn an income in the Philippines, then you need to share that one to the government through paying taxes. That is why you are taxable to your income earned in the Philippines. So still, your tax base is taxable income and gross income depending on what you avail, graduated or 8%. Now, next, non-resident alien, engaged in trade or business. So even though you're not a resident alien, then, but still, nama kayo business sa Pilipinas, you are liable to pay taxes of those income you earn here in the Philippines. Okay? So tax base is still taxable income or gross income depending on what you avail, graduated or For those non-resident alien not engaged in trade or business, but you, um, accidentally earn an income in the Philippines because of some dealings, but what you can remove business here, you are still liable to pay um, income tax. Okay, but only those you've earned, you've realized here in the Philippines. So your tax base is tanawa. Dere, the non-resident alien not engaged in business, your tax base is now gross income. Okay? Not, wala na yung choices because your tax rate is sub 25%. So, the tax code provides that non-resident alien not engaged in business are subject to 25% final tax on gross income. So if we talk about gross income, katuratong sales, cost, less of cost of goods, cost of sales. May labot yung mga operating expenses. So gross income na times automatic 25%. Okay? So muna siya ang kalahian. At tanaw ninyo sa table. So please, this, familiarize. Special alien before, I think, naabtan pa ninyo yung tax 2, nice special alien, those employed individuals in the offshore banking, offshore banking units, regional RHQ, regional headquarters. So those are special alien individuals. Why special? Because they are taxed 15% final tax rate on their gross income. However, when train law is passed into law, the special alien, the 15% final tax rate has been abolished. So, moving forward, after 2018, wala na siya, wala na 15% na tax rate. So, yes, mo na yung problema sa among company because we're a regional headquarters. Some of our managers that time na reklamo because 15% from the toilet tax, but because wala gi-cancel na ang train law, instead ng 15%, nego na sila sa 30%. Because tax stable naman, the higher the income, the higher the tax rate. So more or less na sila around 30 to 32% na. Mas dako na noon ang tax na ilang gibayaran. Okay? Because gi-eliminate man ng special alien or that 15% final tax rate under the train law. Wala na siya. Ha? So 2018 onwards, if nagi problem sa board, 2018 onwards, wala na. I don't know if mo go back pa sila sa problem, but I think really na prospective man yun nakasagaran. So please take note lang, there's no special alien anymore under the new train, the new law ba? In the train law. Okay, it was abolished sa train. Okay, so based on the table, you can see that only resident citizens are taxed within and without. Within and without the Philippines. And in terms of sources of income, in terms of tax base, only the non-resident alien not engaged in business are taxed on gross income. Okay? Subject to 25 tax rate. So, kana lang siya inyo po kasi dali na siya ma-memorize. Okay? Next. Let's go to the types of income an individual can be earned. That will be earned by an individual. We have a regular income. So the tax rate of that is, of course, graduated or 8%. What are those regular income? It can be compensation. Compensation is your salary and wages for the works or services that you've rendered sa imong company or sa imong pagtrabaho. Okay? That's regular income. Another is you have business income. When you do business, that's a regular income. Another is profession. If you exercise your profession as an accountant, as a lawyer, as a doctor, then that is considered as a regular income subject to the basic tax, either graduated or 8%, depending on what you avail. Another income that can be earned by an individual is a passive income. What is a passive income, sir? Passive income subject to final tax, later on you will know those income na wala ra kayo mo ihago. That's in accounting, active income is those imo yung gi-effortan. You work hard for it. Passive income is those income na wala lang, wa kay effort na gi-exert, but after a month you earn. Okay? So example of that is interest, royalties. So kana mga passive income na siya. Later on, we have a full list of passive income which is subject to final tax. Why? Because this passive income, if di gini mo meet sa requirement atong lista sa BIR, then di siya mo meet sa requirement, then it should be added to your regular income as other income. But if mo meet siya sa requirement sa table sa passive income provided by the BIR or by the Internal Revenue Code, then it should be excluded because why? Di na siya taksan sa imong income tax because it is subject to final tax. Once an income, take note of this. Once an income is subjected to final tax, it cannot be subjected to a income tax, because that could be a case of a double taxation. Okay, so once income is subjected to final tax, it cannot be subjected to the regular income tax. And also you have capital gains. So capital gains is, later on we're going to discuss this further, but an overview. If you sold a property, so naman ginay gains diha, for example, your property worth 1 million, but yung gibaligya og 1,500,000. So the gains of 500,000 subjected to 6% capital gains tax. Okay, so please take note, you have 3: regular, passive, and capital gains. Okay, let's do an exercise. Determine the taxpayer classification. Okay. First, Cardo is a natural-born Filipino citizen. His family migrated in the UK 25 years ago. For personal reasons, he decided to return and reside permanently in the Philippines on April 1, 2021. Naabot si Cardo pag April 1, 2021. So what is the classification of Cardo for 2021? So, tanawa, Cardo is a Filipino citizen. So, citizen na siya, di siya alien. Ni-migrate sila sa iyong family 25 years ago. So, from January 1 to March 30, 31 ba? March 31, Cardo is still a non-resident citizen. Why? Napamilya sa UK that time, right? And migrate pa yun siya. It is clearly stated migrated, immigration, di ba? As one of the requirements sa non-resident citizen. So from January 1 to March 31, Cardo is still a non-resident citizen. However, pag abot niya April 1, tanawa, he decided to return and reside permanently in the Philippines. So since it is clearly stated in the problem that he wants to reside permanently, starting April 1 onwards to December 31, 2021, Cardo is now considered as a resident citizen. Because what man ma-change yung citizenship here. Citizen pa man gyapon siya. Doon i-migrate siya sa UK. Okay? All good? Number 2, Mr. Franz Mendoza, an Italian left the Philippines on September 15 of the current taxable year for a vacation trip in the US. Before he left, he secured a re-entry document. First thing, tawadaan. Kung sa citizenship niya, Italian. So, therefore, abandon na dayon ka sa citizen o resident citizen, wala na na. Non-resident. So, ano na rin ka sa alien. So, di ba? Duha ka alien, non-resident alien and resident alien. So, in the problem, he left the Philippines in September 15. So, that's later part of the year. So, later part naman sa year, meaning, si Franz Mendoza is a resident alien. Okay? So, for that taxable year, Mr. Franz Mendoza is a resident alien. Plus, napag-dream gingon, secured a re-entry document. Meaning, if you talk about re-entry document gani, naka-intention mo balik. So meaning, kung nasa intention ni balik diri, meaning permanent resident din sa Pilipinas, ngano mga mo siya re-entry document. Di ba? So, taawag yun ang problem. So by this one pa lang, re-entry document, meaning citizen, resident ni si Mr. Franz Mendoza. Okay, number 2 is a resident alien. Number 3, Miss Jenaline Mercado, a citizen resident in Cebu City, stayed in Singapore for 250 days during the taxable year. What is the classification of Jenaline Mercado? She is a non-resident citizen. Why? He stayed in Singapore for 250 days, man. What is the requirement ganito? 183 days. More than sa 183 days naman. So, he is now considered as a non-resident citizen. Number 4, Miss Marian Reber, a non-resident alien, entered in the territorial jurisdiction of the Philippines as a tourist and stayed in Boracay for 280 days. So, klaro na kayong non-resident alien siya. Pero how many days siya stayed sa Boracay? 280 days. Engaged in business or not? She is engaged in business. Why? The requirement is, if the alien, non-resident alien, stays in the Philippines for more than 180 days, he is now presumed to be a non-resident alien engaged in trade or business. Now, 280 days ko siya stay. Number 5, Miss Angel Locsin, a registered nurse, left the Philippines after passing the state examination to work in the U.S. Angel Locsin is a non-resident citizen. Why? Timan A, left the Philippines for U.S. to work. Iyang intention there is to work, man. Diba? So, taawa, diba? One of the requirement of a non-resident citizen is the intention. So, since his intention is to work abroad, then he can be considered a non-resident citizen. Verse 6, Mr. Bumbum Bautista, a citizen resident of Bohol, left the Philippines to attend the wedding of his brother in Japan. So his intention to go to Japan is to attend the wedding. Is he a non-resident citizen or a resident? He is a resident citizen. Why? Niadto naman sa Japan for a wedding. And the wedding, hindi man siguro na up to 6 months. Right? So makabalik na siya. Pero if he stays there more than 180 days, 83 days, then again, pwede siya ma-consider as a non-resident citizen. But the problem is silent, and by analogy, attending a wedding does not take you more than 6 months to stay, right? So, Bumumbas Bautista is still a resident citizen. Okay, 7. Steve Curry, U.S. citizen, invested shares of stocks for various domestic corporations during his recent stay in the Philippines. He received dividend income from the said investment. What is Steph Curry classification? He is a non-resident alien not engaged in business. Okay, why? Again, bisan pa nag-invest siya of shares of stock, invest siya of shares of stocks in the Philippines, receiving dividends or investing in stock does not make you doing business in the Philippines. Huh? So take note of that. So Steph Curry is still a non-resident alien not engaged in business because the investment of stocks and receiving dividend income under the law, jurisprudence provide does not, make him an alien engaged in business. Okay? Unless siya good mismo nagtukod, siya good naka-register sa iyang name of business, then that time, we can consider him as a non-resident alien engaged in business. But the problem does not state that fact. The fact only states he invested shares of stocks. Right? So he is still a non-resident alien not engaged in business or trade. Another practical exercise, this is the last one, guys. An individual taxpayer has the following information. So country earned, Philippines, Australia, Japan. So we have 5 million gross business income. Expenses, 3 million in the Philippines. Australia, 2 million gross business income. Expenses, 1 million. Japan, we have 1 million gross business income and an expenses of 500,000. So determine the taxable income. So based on the table, if you are a resident citizen, you are taxed within and without. So since within and without, and your tax base is, example lang, we're gonna choose graduated tax rate for all of this. The tax base should be taxable income. So to talk about taxable income, you are gonna deduct the expenses. So resident citizen man siya. So all 5 million plus 2 million plus 3 million, that is 8 million total gross business income, less your expenses of 4,500,000, right? So for 8 million minus 4,500,000, that is 3,500,000. So if you are a resident citizen under this problem, the taxable income is 3,500,000. If you are a non-resident alien, non-resident citizen, taxable only in the Philippines. So you will consider only the income earned in the Philippines and the expenses. Kaya tax base niya is taxable income. So 5 million minus 3 million, that is 2 million. What if the individual is an OFW in Japan? Naman A, OFW is considered as a non-resident citizen. So only income earned in the Philippines. So your answer letter B is the same with letter C. So it is only 5 million minus 3 million. It is 2 million. Letter D. If it is a resident alien, still, resident alien, taxable only in the Philippines. Tax base is taxable income. So the answer is still 2 million. Income earned in the Philippines only and expenses in the Philippines only. Letter E, if non-resident alien engage in trade and business. So non-resident alien engage in trade and business are taxable only in the Philippines. Tax base is taxable income. So 5 million minus 3 million. The answer is 2 million. Letter F, if non-resident alien not engaged in business, taxable within or without? Within only. So Philippines gihapon. The tax base, however, is taxable income or gross income? Gross income. Right? So, only 5 million. Dili na 2 million. Okay? 5 million. Gross business income raman ang non-resident alien. Okay? I think that's it for this meeting. Hope you've learned something. And the next recorded video will be uploaded soon. Okay? So because your final pre-board will be next week. Okay? So after this, I'm gonna discuss inclusion and exclusion of the gross income, and then the framework of the individual taxpayers. Let's go directly then passive income, and then capital gains tax, fringe benefit, and then last would be the corporation estates, estate trust and partnership. Okay. So that would be all. Thank you, everyone.